Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, January 7th, 2008. Well, as we get into the intraday video, folks, I want to discuss a little bit about what we mentioned in yesterday's video on the intraday basis, as we had talked a little bit about the high probability of a sell-off coming in this market. And I just alluded to it briefly in what our analysis was showing, because really the hardcore analysis and the direction and pivot lows and pivot highs and turns are all released in the Research Center on our website at InTheMoneyStocks.com. But nonetheless, it was alluded to yesterday, and you're seeing the results today. So, in any case, what we're seeing right now, folks, is the Dow trading lower by about 240 points, or about 2.7% lower. The NASDAQ down about 55 points, or 3.3% lower. And the S&P down about 27 points, or 2.9% lower. So you're seeing almost 3% across the board declines in this market. And it was due. I mean, let's just look at it, and we'll call a spade. The market really, over the holiday season, was up about 6 to 7 straight days. Almost no volume in that market. It just floated up almost every day, and that can't be healthy. You know, you need to see volume behind it. That's one of the key things you have to follow is volume trends, and there was just no volume in it. So sure enough, you're getting the pullback, and a lot of our technical analysis was showing this was going to happen as we released in our Research Center last night. For instance, what showed it? Number one, yesterday in the Research Center, those that were belonging to the Research Center found out that Goldman Sachs, Apple, and ExxonMobil were all negative yesterday when the market was up. All right, we use Goldman Sachs and Apple and even ExxonMobil as key market indicators, and when all three of them were down, it has to let you realize or make you think, wait a minute, what's going on? The market was up, these three are down, that's got to be a little bit of a leading indicator signal. Sure enough, what happens today? The markets get smacked. Now, why are the markets getting smacked on the news side? Well, number one, you had jobs data. The ADP number was much uglier than anticipated. Number two, you have some warnings from Intel, basically Intel coming out, giving some warnings out in the market. And number three, there was another fraudulent type company unveiled, an Enron, if you will, or Bernie Madoff or Madoff type situation in India with one of the largest outsourcing companies in India. So there's a lot of situations here going on where the market's just not content with what's going on. We're very, very worried, getting worried again, and really what's going on here is you're getting that normal pullback. So I want to go over the intraday market analysis because, again, it's fascinating stuff, and we'll take a look at it here. Number one, folks, market gapped lower. So right away you get a gap down, you got a little bit of a move up, and what do we know about the 10 o'clock time frame? I went over this in yesterday's video. This holds true for today again, even though you didn't have very much of a move up. Sure enough, 10 o'clock, this is your 10 o'clock candle here. What happens? The market sells to the downside. So 10 o'clock reversal, you have an up move into it, and then a down move at 10 o'clock to 10:30. 10:30, you basically put in the lows. Notice the lows happen to be at the 200 moving average intraday. So again, you have a key support line right here, which are the lows at 10:30 after a breakdown at 10 o'clock. 10 o'clock reversal, breakdown to 10:30, lows get put in, and then you have a gentle move up. Where does the gentle move up take you? To the 20 moving average, at which point you start to sell again. Now this is, off of this move down, this is known as a bearish, in spirit of bear flag, right into the 20 moving average. 20 moving average has to be taken. First hit of the 20 during the day, or an extended amount of time, is an extremely high probability of a move down. Sure enough, the move down happens. Comes right down here, trades right along the 200 and actually pierces it and closes below. But one thing I want to point out is you never get confirmation. The low of this candle after has to take out the low of this candle, preferably even close below, but some people that want to take more risk don't even wait for that. But in any case, you do not confirm it. What does that mean? It means you're not going to break lower at that second. Instead, you're going to trade up a little bit. And sure enough, what happens here, guys, is that the market trades in a bear flags pattern, in spirit of bear flag again, creating another bearish pattern right into a necktie. Now, what's a necktie? A necktie is a cross between any two moving averages where a market goes right into it. A stock or a market price goes right into it. That's an extremely bearish in this situation, or bullish for a bounce pattern if the market was above it coming down into it. Here, it's below it and moves up into the cross. That's a bearish signal, extreme resistance there, as you have double moving average resistance. And what comes on? The market breaks lower. This time it confirms. Notice, now it closes below. That means more sell-off. Sure enough, the market trades lower. Okay, so that's the key resistance. Now, you also have a pattern here. It's not a great pattern, so I really don't necessarily want to talk about it much, but you do have an in spirit of head and shoulder pattern. Here's your shoulder, here's your head, and here's your little bit of a shoulder over here. All right, what you do is you want to take the neckline, and at that point you can also use it as a break. Notice the break from this confirmation candle, which I just drew in before, happens to be the same point of the head and shoulder in spirit of breakdown pattern as well. So they coincide, they're going to match up. It's really just confirming your anticipation or your knowledge of technicals here, knowing that that's going to break lower at that confirmation point because it's also a head and shoulder breakdown in spirit of. Okay, so notice the 200 also, very solid support here. Notice how the market hugs the 200 until here when it really breaks down, and that's when you get some more downside in this market. Now we're getting a small bounce intraday. I am shooting this video while the market is open. It's about 2:45 p.m. Eastern time right now, and the futures are currently down 25 points. NASDAQ is down 53.5, really right where we were when we started the video, give or take a small amount up. Now here's the key, guys. Again, I want to go to the 30-minute chart and the 60-minute chart because I do find very, very fascinating some of these other signals here, and I want to really touch on them because you have to go to other time frames to confirm your knowledge and your thoughts. If you rely on a small time frame, a larger time frame can take precedence. All right, and what do I mean by that? Well, it's just like you have a small, a mouse and a lion. Who do you think is going to have more power? So if you're following the mouse and a lion comes along, you better confirm that the lion's not hungry, in essence, so you can make sure not to get in trouble there. So let's go to the 30-minute chart and expand it, and let's see what we can see. Well, here you can see the 30-minute, and you're going back a few days here. Here's 1 day, 2 day, 3 day, 4 day, 5 day, 6 days. And what you can see is, look at where the gap down took us. The gap down took us right below the 30-minute 50 moving average. So right away, if you can't get above that 50 on a push on the 30-minute here into 10 o'clock, chances are you're going to fall back down. Sure enough, that's what happened. And we confirmed that by knowing that reversal pattern on the 10-minute. So you get the hard sell-off, you get the retrace, never really got back to the 50 moving average, but at one point now you're breaking lower, and sure enough, at what point do you hit down here? And I want to draw this in. Look at the support line right over here. Okay? See this support line where the market kind of stalled out before breaking up? It was actually a resistance point, but once we broke it to the upside, it became support. Where does the market come down and rest right now? On this support line right here. Alright, so again, I want to show you this. When the market was moving up over here, it hit the resistance point here, bounced down, bounced up, bounced down here, then broke up, finally closed above, and then off to the races. Therefore, on the way down, that's going to act as near-term support. Now, it's not a major support line by any stretch, but a minor one, which is what you're getting the bounce off of now on the 10-minute. Alright, so that's another just expanding the chart, knowing your supports and your resistances so you can become a profitable trader or an extremely profitable trader, as we are here at InTheMoneyStocks.com. And again, all these key levels, I go in so much more depth when we're talking about the daily charts, and on the Research Center we go into the daily levels, because the daily really, unless you're a day trader, these intraday levels don't necessarily mean that much. It's just more of an explanation of our prowess, our knowledge, and our educational abilities. Now, let's go to the 60-minute. I want to go to the 60-minute. Here's the 60-minute chart of the SPY, and you can see we had talked about this in the Research Center. I had said to everyone yesterday in the Research Center, see this move up? Way too extended, way too fast. It's got to come in. You add that Apple, Goldman, and ExxonMobil all down yesterday, there's a high probability that you're going to get a sell-off. And I said, you break this 20 moving average, you're going to see more downside, probably to the 50 moving average on the 60-minute chart. And I had this exact chart up. This line was drawn in, and I said, you guys break this point right here, which happens to be the 20 moving average, you're going to see more downside. Sure enough, what happens? We gap below it. That's a signal enough. And where do you go? To the 50 moving average. Very laid out perfectly in the room yesterday, in the Research Center, in the video, the daily market technical analysis video in the Research Center, and that's what you're looking for. So anyone obviously in the Research Center could have set themselves up beautifully for that trade. In any case, notice here you're going to have good support on the 30-minute. Where is that matching up to as well? Absolutely, right here, this support line as well. So you're seeing a double support on the 30 and the 60 in two different areas, one using a moving average, one using the charts and analysis tools to find out where the support is. And sure enough, that's where it is. Now again, it's not a major one, but this 50 moving average should work as a very good support here. Ultimately, we'll see if it gets broken. I mean, this is where the Research Center comes into play, because we'll be releasing our key turn dates, obviously, and whether or not on the daily chart, do we expect more downside today and tomorrow and next week and next month, or is this it and now we're going to go back up? That's the question. That's what that's the $1 million question. Obviously, a lot of the Research Center players had obviously taken the the info we gave yesterday and the day before and gone short the market, and sure enough, it's paying dividends in a huge way today. In any case, folks, we encourage you all to join the Research Center, get the live updates, and we do hope you guys are learning some stuff off these intraday videos, as they are very fascinating on the chart analysis. And this is just minor stuff. We can go into way more depth using way more indicators and so forth. Have a wonderful day, folks. We'll be back tomorrow's intraday video. Take care.